Welcome to Personal Finance Channel. In this video, we will be discussing some of the top Canadian companies and industries that are poised for growth and success in the coming year. Whether you're a seasoned investor or just starting out, these stocks are worth keeping an eye on as they have the potential to provide strong returns for your portfolio. So sit back, relax, and let's take a closer look at some of the best Canadian stocks to buy. So, before we start, if you enjoy watching similar content, do like and subscribe to our channel. Number 10. Nuvei, TSE, NVEI. Nuvei is a provider of payment technology solutions to merchants and partners. The solutions provided are mobile payments, online payments, and in-store payments. Its geographical segments are North America, Europe, the Middle East, and Africa, Latin America, and the Asia Pacific. The vast majority of its revenue is generated from North America and EMEA. The tech stock went public in August of 2020. Since going public, the company has attracted plenty of attention. There are 14 analysts covering the company, 9 rated a buy or outperform and 5 rated a hold. Number 9. Shopify, TSE, Shop. A list of top Canadian stocks wouldn't be complete without the top performing Canadian stock in recent memory, Shopify. And yes, it's still one of the best performing Canadian stocks since its IPO even after its catastrophic drawdown. Shopify offers an e-commerce platform primarily to small and medium businesses globally. They operate in 2 primary segments, subscription solutions and merchant solutions. Subscription solutions allow subscribers, primarily merchants, to conduct business through Shopify's tools, while merchant solutions help businesses become more efficient via Shopify Payments, Shopify Shipping, and Shopify Capital. Number 8. Telus, TSE, T. There are limited 5G plays here in Canada. We're often forced to head down south to the American markets if we want exposure to high-growth 5G opportunities. While Telus doesn't exactly boast world-beating future potential, the stock is the best telecom stock to own in the country today in terms of both 5G exposure and overall growth. Telus is part of the big 3 telecom companies here in Canada, and is the stock you want to buy if you want exposure to a more pure-play telecom company. Number 7. Parkland Fuels, TSE, PKI. Parkland Fuels is one of Canada's largest and one of North America's fastest growing independent marketers of fuel and petroleum products. Parkland serves motorists, businesses, consumers, as well as wholesalers across Canada and the United States. The company's growth is primarily driven through acquisitions, evident by its purchase of Chevron Canada's downstream fuel business, making them the sole distributor for Chevron-branded fuels. Speaking of acquisitions, recently the company entered the frozen food business with the purchase of M&M Foods. The acquisition is certainly a new avenue for growth for Parkland, and it will be very interesting to see how it works out. Number 6. GoEasy Limited, TSE, GSY. GoEasy Limited is a small-cap Canadian stock that provides non-prime leasing and lending services through its Easy Home and Easy Financial divisions. The company has issued $5+ billion in loans since its inception. It also continually works to increase Canadian borrowers' credit scores, with 60% of customers increasing their credit scores less than 12 months after borrowing. The company provides loans for a wide variety of products including furniture, electronics, and appliances. GoEasy has become an attractive alternative for Canadians due to strict lending restrictions placed on Canada's major financial institutions. The company is also growing its dividend at one of the fastest rates in the country. The company has a 35% 5-year annual dividend growth rate and has raised dividends for 7 consecutive years, including the most recent increase of 45%. With its payout ratio being in the low teens, this dividend growth is unlikely to slow down. Number 5. Dollarama, TSE, Dole. In the current economic climate, defensive stocks have gained a ton of popularity. One of the most prominent consumer defensive stocks in the country is Dollarama. The company provides a broad range of everyday consumer products, general merchandise, and seasonal items, with merchandise at low fixed price points. General merchandise and consumer products jointly account for the majority of the company's product offerings. The company's stores are throughout Canada, generally located in convenient locations, such as metropolitan areas, mid-sized cities, and small towns. Number 4. TFI International, TSE, TFII. TFI is a trucking and logistics company. The company operates in 4 segments: package and courier, less than truckload, and logistics. Along with 31,000 employees, it has over 500 terminals across North America. The company has operations in the United States and Canada. Following its recent acquisition of UPS's less than truckload freight business in 2021, the bulk of its revenue, almost 75%, will come from the US. Number 3. Loblaw, TSEL. Loblaw is one of Canada's largest grocery, pharmacy, and general merchandise retailers, operating the most expansive store footprint in Ontario and maintaining sizable presences in provinces like Quebec and British Columbia. Regardless of the economic circumstances, humans need groceries. Without food and water, we don't survive. And when times get tough, we tend to pinch pennies. The distinct advantage Loblaw has is the fact it has a much higher discount element to it than other grocers like Empire Company and Metro, particularly its No Frills brand. And although they do have some intersection in terms of products, another discount retailer like Dollarama is unlikely to take significant market share. Number 2. Canadian Natural Resources, TSE, CNQ. Canadian Natural Resources Limited, is a senior Canadian oil and natural gas company that operates primarily in the western Canadian provinces of British Columbia, Alberta, Saskatchewan, and Manitoba. Canadian Natural is one of the most efficient companies in the industry. With break-even prices in the $30 WTI range, the company can maintain positive cash flows in almost every environment. In fact, despite oil prices seeing one of the largest collapses in their history in 2020, Canadian Natural still produced over $2.2 billion in free cash flow in fiscal 2020. Number 1. Royal Bank of Canada, TSE-RI. This Canadian bank stock is simply too good right now to not be included on a list of the best stocks to buy in Canada. Royal Bank is a global enterprise with operations in Canada, the United States, and as we'll see the importance of later, 40 other countries. When it comes to international banking, there isn't a bank with more exposure. The company is Canada's most valuable brand and has been for the last 6 years. It is also currently the largest bank in the country. It lost its title of Canada's largest company to Shopify during the tech frenzy in 2020 and 2021. But, as it has done for a very long time, it regained its crown at the start of 2022 with a market capitalization in excess of $175 billion.